What's up, everyone? Just wanted to share with you an example of what it would look like if you deferred your mortgage for the next 6 months. Okay, so we're going to use some basic numbers. But before I begin, I wanted to make sure that you understand that I am not a mortgage professional. If you need advice with your current mortgage, please speak with your bank, your mortgage broker, or whoever else you might normally go to for financial advice. So now for this example, we're going to assume that your mortgage balance is $500,000. We're also going to assume that your interest rate is 2.79% and the amortization period is 25 years. All right, so now using these numbers, we get a monthly payment of $2,318. Okay, so now let's look at the first example where you're going to renew your mortgage in 6 months from now. Your mortgage will renew based on the $500,000 and subtracting any principal payments you've made in those 6 months. Typically, half your mortgage payment is going towards the principal, the other half is going towards interest. So you would be renewing based on a balance just over $493,000. We're going to assume that everything is staying the same, including interest rates, so your new monthly payment would be $2,285. The difference between your old and new payment is just under $400 per year. So now $400 might not sound like a lot, but when you put it into perspective, that could be 1 to 2 months of groceries, it could be a car payment, it could be added to your emergency fund that you're building up as well. So now let's look at the second example where you choose to defer your mortgage for 6 months and renew once those 6 months have passed. The deferral amount would be based on 6 times of your monthly payment, which works out to be just under $14,000. When you renew your mortgage, it will be based on the balance plus the entire deferred amount, which is just under $514,000. Your new monthly payment, based on the same interest rate and no other changes, works out to be $2,381 per month. That is a difference of about $756 extra per year that needs to be paid by deferring your mortgage. So the difference is that in the first scenario, you'll potentially get a savings of about $400 per year. In the second scenario, you'll be spending an extra $800 a year. So each household and family is going to be different. So if your finances are good and you don't need the extra cash flow right now by deferring your mortgage, then maybe you don't need to do this. But on the flip side, if you're under financial stress right now, then it might be a good idea to take advantage of this despite the additional long-term costs. There's really no universal right or wrong answer here. It's just whatever is right for you and your family. So I hope that this video provided some insight and clarity for you guys. Hope you're all staying safe, and I'll see you guys next time.